All right. Hello, everybody. Welcome back to the show. We are here on episode number 4 of Robinhood Weekly. I'm here with myself, Tanner, as always, and we have a special guest today who is not only going to be breaking down why they're long hood and they've been long hood for the better part of a year now, but also their Q4 predictions, given they have a little bit of a math background. So we're going to crunch through some numbers. Joshua, thanks for being on the show with us.
Yeah, thanks for having me, fellas.
So I think let's get started, Josh, with who are you? When did you discover Hood? Why are you an investor? And then we'll get into some more details for Q4.
Sure. I'm long-term investor. I've been investing for 15 years now, probably. My day job is as a project manager, pharmaceuticals. So throw everything I say today out the window because, this isn't my field of expertise. I will say, though, it's very math heavy, which comes in handy when it comes to finances. My degree is in chemistry, which was also very math heavy, which is I'll get into explaining the calculations, but it actually plays into how I am getting my numbers. It's something that I use daily at work. But I first heard about Hood probably a decade ago. I remember when they first rolled out the brokerage, you actually had to join a waiting list, which is funny because now I hear people complaining about the credit card wait list. And I don't think people remember that when they rolled out the brokerage, there was a wait list. And I think that worked out pretty well for them in the long term. So maybe employ some patience on the credit card side of things and give them their due. But that aside, I didn't really start using the app full time until like 2019. And I think there was something that every user experiences that you can't really explain. It's like the allure and simplicity to the user interface that Robinhood has. Now, as an investor, I started trading the stock earlier this year. We were just talking before we hopped on live. And I did a write up in April that kind of laid out my decision making for taking my first entry into a position for Hood. I think that write up was called "More Than a Pretty Face." You can go back and still read it. It's on my Substack. I laid out my thesis there about Robinhood and how it was a sticky product. And I opened the article with Hotel California by the Eagles. You can check out anytime you like, but you can never leave. It's kind of like a walled garden that they were building, and I kind of saw that developing as they rolled out the credit card and the IRA and the spending account, and now RIA, futures, joint accounts. They keep rolling out these products that bring you in, and then once you're in, it makes it hard to leave. A lot of people like to compare them to Costco because they have the membership plan, but I think honestly it's more like Apple, where you buy the product for some reason and then you realize there's other things related to that product that you want. You buy the iPhone and then you get a HomePod and then you get a MacBook, and then before too long, you're using so many of their products that even if you wanted to leave, you can't leave. You're stuck in there. And I kind of feel like Hood is trying to take that approach too, where they get you in, you get a credit card, you get a spending account. Maybe you roll in your IRA, which I did this year when you could get 3% back match, and that was awesome. And then once you get all those things in there, it's really hard to change all of that over again. And do you really want to do that? And as a younger investor, people like to talk about the wealth transfer, like all these people who are my age or younger in their 20s that are rolling stuff into these accounts. When that money comes their way in the future, they're probably not going to want to move it. And even if they do, like I said, it's going to be hard to move all of those things. So they're probably going to bring in their external accounts into Robinhood because they might, the rest of their life might be in there. Once you are in the Apple ecosystem or the Google ecosystem, you don't get out of that easily. You have to change everything, right? And that's really what my thesis was built on. And I told you earlier, I bought my first, I went in hard. I bought 3,100 shares at 1737. It's all there in my write-up from April. And I just added to that position. And I got up to 12,000 shares at one point before scaling back on that. And I still hold shares. And I've done options contracts too. But most of those I've closed out since we've gotten up here. I actually just re-entered some call options that are out past the upcoming's earning because I think it's going to be a banger of a Q4 for them. But yeah, that's my spiel.
Josh, right before this, you were talking about the EPS revisions on Seeking Alpha. So I Googled those. Should I bring this up? Because I think obviously people are talking about how positive things are going to be for Q4. But once you actually see what analysts are looking at, it's like you can see why there are some people who are keeping their option or potentially their options, but even their shares, even as things have potentially tripled for the year. Like,
yeah, I just checked it right now. So this number was 819 million a week ago.
It keeps moving up.
Tanner, you can share yours as well. Yeah, it's up again.
But I'm on the same page as you. Just go to the earnings revisions. That's what I like looking at. If you, earnings revisions right there, and then scroll down. Look at that chart right there. Wow. It's nothing but up in the last little bit.
I still think it's low.
Yeah.
Holy
That's both revenue and EPS.
Yeah.
So they're assuming 47% growth next quarter.
Yeah. Yeah. And then look also how bottomed out their growth is for 2025 and 26, which I also think is funny. It's like you're talking about 10% growth rates. Like even Wall Street is so bearish whenever you just go out a little bit further.
Yeah.
So there's so much growth left for them to price in as well. If Robinhood doesn't want to go below their targets of 20% per year.
Okay, so then let's get into this discussion. We got a lot to talk about, but I think let's start off with Q4, and then we'll get into our other segments. So Josh has been preparing some information on what he thinks Q4 would look like. Josh, you can share your screen on whatever you want to show us.
Sure.
And essentially, you believe Robinhood's flirting with $1 billion in revenue this quarter.
I do, and I'll start with the most recent crypto.
So you have a similar belief that this is a crypto quarter?
I mean, yeah. I mean, it's always gonna. Well, for the near term, I'd say the next several quarters. I mean, Robinhood's getting like 40% of the revenues from crypto. And here, let me pull up the window. But that's not always going to be that way. They're rolling out new products, and maybe at some point in the future, wealth management will bring in more revenue. And the crypto's not going anywhere. I think people are, started to realize that, obviously with the presidential election and where that landed. But can you see this? Okay.
Yep, we're good.
Yeah. So really, all I'm doing here, and this is, you can apply this to equities or options also. So Robinhood telegraphs 2/3 of their quarter for us every quarter, which is awesome of them for shareholders. And I hope they never stop doing that, honestly, because I think transparency is part of their product and what they want to be for not just shareholders, but for their investors. This is just showing you the crypto volumes. And so this is an aggregated chart of price times volume over time. Because you can't really just look at volume, because the price of what's being traded matters too.
Right.
And this is everything that Robinhood trades on their platform. So like everything is included in this: Doge, BTC, XRP, and it's based on it's things that since November have been traded. So I actually don't include Bonk in here because it was more recent in December. So December actually might be a little bit higher because they're getting volumes for Bonk that didn't exist in November. And this will keep
happening. I bought 150,000 Bonk, so
I mean, there you go. And maybe it'll double. Maybe. Some people think it will.
Yeah.
But they're going to keep adding coins, right? And so you're comparing back to previous quarters where they weren't getting volumes for coins that didn't exist on platform. But this is just showing November and December, and I have a line kind of splitting it here. And what I do is I calculate area under the curve, which is something I do in my job a lot. It's actually something we use to quantitate things for in, like chemical entities in drugs. So what I'm doing here is I calculate, say the curve from November 1st to today is 100%. You can calculate the percentage in November and December that's under that curve.
Huh.
And since we know what the equity notional volumes were in November,
right,
and I know the area under the curve for November, and I know the area under the curve for December, I can solve for X, which is the notional volumes for December.
How do you get the area under the curve for December? Is it total crypto volumes traded in general?
So for December, it's just the percentage of the total area from November to December. So
Got
like here is showing it. I call it crypto strength meter because it's showing December relative to November, and it's 53.7% versus 46.3%. So that's showing you that there's been more volume traded in December than there was in November. And we know
Right.
there was 35.2 billion notional volume in November. And I can take this and tell you roughly what the notional volume is going to be in December. And I also know roughly what their take rate is. So I can kind of tell you what the revenue is going to be for December
Yeah.
too.
Yeah.
And then you can apply this to equities and options too. And I'll show you that. Let me switch over. So this is just showing you
the data you're getting for the area under the curve for December. This is off what, like CoinGecko, just total crypto volumes in the industry?
So you can pull it from CoinMarketCap. You can pull it from
Got it.
investing.com. I'm just pulling the CSV files, the raw data for each day. So this is every single day, the total volume for that day and the price at close for that day. So it's not exact, but it's a pretty close analysis.
It's a pretty decent approximation.
Plus or minus a few million. Yes.
Yeah.
And then let me show you.
There might even be a slight surprise on the upside for take rate as well. I mean, if you're just looking,
there will be.
Yeah.
Yes, it keeps going up.
Yeah.
And I don't know that everybody's paid attention to that. Earlier this year, the take rate was like 0.035 or something, and now it's over 0.5% for 0.3%. But this is a summary of everything. So I just applied what I just showed you from crypto to equities and options contracts. And I know this works because if you look at options contracts down here, it's the bottom table. You can see that Q3 and Q4, and I'm assuming December is just in line with what we got in November for options because I don't know the numbers. But you can see the areas here, like it's roughly the same volumes. And we know that that in Q3, the total revenue from options was 201 million, I think. So what I showed here is Q1 versus Q4. And Q4 is 31% higher area than Q1.
Right.
And if you take that 31% and multiply it by what you had in Q1 for revenues, which was like 130,000 or 130 million, you get 202 million for Q4, which is visually, it should be about the same as what Q3 was, which was 201 million. So the numbers are accurate. And you can do the same, like I said, for equity notional volumes. I think equities is going to be a really big beat. I mean, just look at this table. And this is assuming December was flat. And I think why you're seeing the big jump in equity volume and you're not seeing it as in options is because a lot of the money that's come into Robinhood recently were for like the IRA matches and people bringing over larger accounts that are probably just shares that they're not trading options in. So you're seeing a really big bump in the equity side of the business and not so much in the options because it's not,
That's interesting.
Right? They're bringing in things that are like if I'm bringing in my 401k, it's probably just shares of something.
Yeah.
And I'm probably just going to buy shares in that. I'm not going to buy options in that, bucket that I have in my account. I'm saving that for my brokerage account.
Right.
And that's why I think there's the discrepancy in options and equities. So I think equities is going to be a huge beat. I think options is pretty much going to be in line with what we saw in Q3.
Now, are you pricing in any contra revenue as well? Because
yes, I am.
Okay.
Yes, and I'll show you that. Let me leave this one. And this is my last table, and I'll be done. So the other one that I have is the cash flow table.
Yeah, and then we'll get into what that means for the full Q4 revenue.
This is up to date. Yes, and this is.
By the way, Josh, what state are you from? What state were you?
North Carolina.
Okay, the accent, I could tell.
Southern hillbilly accent. I know.
I
Just
love
try
it.
to look past it. It doesn't mean I'm dumb. But here's the cash flow table, and this breaks it down. I have contra revenue built in to the operating expense. So this is contra. This is what you saw in operating expense last quarter, plus the extra contra revenue that we're going to see this quarter. So I think it was like 540 something, 550 last quarter. So I added in the contra revenue into OpEx to take that out. So it does account for, I think they were expecting was another 27 million on top of what they saw last quarter, which was 27 million. So an additional 27 million in contra revenue was expected for Q4. That's what it said on the earnings call. I don't know if that's changed, but that's just
I didn't perceive it that way. I think they, the way that I read into the earnings call was they went from, I think it was 14 to 27, which was a 13 million difference. And I think they said that they were going to climb as much as they climbed the quarter before. So I assumed,
I think it's 13.
13 million on top of 27. So I think they're going to get 40 million.
40 million.
Yeah.
Okay. So this number is actually higher for OpEx. So that would just make the net operating income higher.
Yeah.
So this is worst case.
Yeah.
I'm sure that, maybe they spent more on advertising too. I have seen a lot more ads online.
Yeah.
Robinhood recently. So that might be part of it. But this just breaks it down. There's the trading volumes. It's broken down into equity.
So you think they're going to do 1.05 billion in revenue, and they will have basically a 30% net income margin with 312 million in profits, which last quarter they had 120, I think, million.
It's a double. Yeah.
Yeah.
Well, they did 150 last million in net income.
Right.
Yeah. So it's a double.
So they should massively beat EPS at that point.
They should. And
you kept other transactional revenue as 19. You just kept it flat.
I kept it flat. Yep.
I like that. That's conservative. That's good.
From last quarter, yeah.
And interest. Go ahead, Tanner.
What about event contracts? And then what about credit card transactions?
So event contracts, you could add in another 5 million if you wanted to, but I was trying to be conservative.
If you want to,
maybe, if you want to throw in another 5, I don't think 5 on top of 100 or 1,000 million is gonna matter that much. But yeah.
So the interest income margin, I have them doing 97 million. Is that accurate? Is that the same number you have? Roundabout. Because because they did 6.8 billion, right? So assuming they do 6.8 billion again, meaning margin doesn't increase in December, which I think it will. The average of 6.8 plus 6.2 from October divided by 2 is 6.5. So you do 6.5% on top of the total margin, divide that by 4 for 4 quarters, I get 97 million. So that's a substantial increase from interest from last quarter of 82 million. I think they did.
Well, they should have more interest because they have more sitting in the, more cash in there now.
Well, rates adjusted really recently, but that shouldn't really affect it.
Yeah, I don't think it had a big impact.
No, but it's definitely going to climb up because those carrying costs are going down.
Yep.
And they're attracting so many new users. Like, we also have to remember
that the new users is a big thing.
They brought on how many new users during even just that gold month? Like, we're not going to see a large benefit because they were just right at the tail end of Q4. But like, Wall Street will pay attention to that. That's great for long-term growth.
Which is weird though, because like you were saying, if you look at what they're projecting out for next year, it doesn't seem like they're looking at it. I think they're looking at it.
Okay, yeah, fair.
Quarter, right. This quarter they keep revising up their EPS and revenue expectations, but beyond this quarter, they're not looking at any of it being. I think they're expecting maybe a market downturn that obviously would impact Robinhood, but.
Okay, here's another question. The 120,000 gold subscribers they got, do you think they're going to count that 5.4 million as revenue if you just multiply that times 45, or are they going to amortize it over 12 months?
I don't know what they'll do. I would think amortize it over 12 months.
Yeah, because if they don't, they're going to have the burden of showing another 120,000 members, no matter what, because they have to show growth, right?
I think they'll be conservative and amortize it so that they're not going to pull it all forward into just a single quarter. I don't think they need to pull it into this quarter.
Yeah.
I mean,
It's
the
such a
revenues
strong
they're already
quarter.
gonna have. Yeah, why bother?
Yeah.
So what is the EPS number you come with? 312 million divided by 900 something million shares, right?
Isn't it 884 total outstanding?
I think you're right.
It's like 0.4 something, maybe.
So that means you're coming up with basically, analysts say 38 cents. You're coming up with basically 40 cents, round about the same.
Yeah.
Yeah.
It's just insane what a year can do, eh?
Dude, if Robinhood says they made $1 billion in revenue, like most software companies aren't doing $1 billion in revenue. You know, like that's
We're at 905.5 million shares outstanding on a diluted basis.
okay. So probably 37 to 40 cents. Is what we're
Yeah.
looking at. That's where their extra 5 million, juicy 95% margin. That's where it helps that EPS, helps that bottom.
I mean, there's only a handful of companies growing at the rate that they're growing with margins where they have it. I mean, there's like 30 companies in the entire market that are doing what they're doing right now.
Yeah.
Okay, so let's talk a little bit about the stock and valuation. I mean, it's at $38, enterprise value of I think 27 billion, market cap around 32, 33. Do you think it's cheap right here? Would you be buying at $38?
I am, just because I think they're not pricing in anything beyond this quarter. I think shares are fine here for long term. If you're just gonna hold it, I don't see any reason to sell out. I mean, I don't, maybe not go heavy, but I think dollar cost averaging here is totally fine. If you're looking at, 2, 3, 4 years from now, things should only get better for Robinhood. I mean, there's products that they haven't even launched yet that, I mean, they haven't even done anything with some of these companies that they've purchased. So none of that's priced in my opinion.
Yeah, very future-proof day in the way that they are going after all of these things that we haven't even seen like any remote impact at all from Trade PMR, from Pluto, from all of these tools that they are working on, but haven't even been launched yet. Futures, for example, they want to be a 9-figure business.
I mean, futures, I don't think people understand the contracts and how expensive they are for futures. And even for Robinhood,
can you give us an overview on why futures would be really helpful for them?
Well, I mean, equities and options, they make what, like 6 cents on a trade? They're going to make, almost 10 times that on a futures contract.
That's not including the margin that you have to hold to even remotely buy them.
Right. I mean, for one, ES contract, it's like you have to have 12K or something to buy one in your account. That's just that's just your collateral to buy the contract. So the people that are going to be buying these it's not going to be small accounts. I mean, you can buy the minis and the micros, but like the regular standard futures contracts, it's going to be people with a lot of money buying them. So they're not going to miss that, whatever take Robinhood is taking on those trades. I think they said what they were going to offer for those. Wasn't it?
It was a 50 cents.
50 cent. That's actually really good. Schwab charges like $3 per contract.
Yeah.
So Robinhood's going to be really cheap. And that's still, that's still 10x, almost 10x what they're getting for when you place an equity trade. So you don't need as many of those trades to make a lot of money. And retail hasn't discovered futures yet. People didn't trade options really until Robinhood rolled it out.
That's correct.
I think you could see the same effect with futures contracts. Now, people are going to lose a lot of money probably because they don't know what they're doing. But hopefully they do it in a way that people will understand the risk involved. But if it becomes popular, like options trading has, they'll make a lot of money.
In your opinion, you've traded futures before. Can futures become as popular as options? Is that possible among retail?
I think it's better, honestly. There's no day trade requirement on futures. The liquidity is better on futures.
24/7.
Than options. It's 24/7, which, I mean, that's not as big a deal anymore that Robinhood's rolled out 24/7 on most of the big big. Well, it's 24/5, but
Yeah, but
on
not
most
on
of
the
big,
options.
no, not on the option. So you're getting leverage on a futures contract, like you get leverage on an option, but you could sell it at 3 a.m.
Yeah.
if if somebody drops a bomb somewhere and you happen to be awake, you can get out of that position. Whereas an option, you're stuck in it until 9:30 the next morning, and you're going to lose a lot of money.
Yeah.
Yeah. It's very interesting. It's got that Robinhood effect where they could change the industry in terms of how, deeply retail is in it. What I'd like to see is like, do they have any statistics on, let's say, event contracts even? What percentage of the people that traded event contracts was their first time was with Robinhood?
Mm-hmm.
Yeah, dude. The first time which was basically a futures contract, the presidential things. That was the first time I've ever done it. And they made it feel like it was like buying a stock.
Now,
so easy.
Think about this. This is how conspiratorial I'm getting, is that you need to sign an extra disclosure to be able to trade futures. But they had, I forget how many users, I think it was over 1 million, sign that paperwork already to do the event contracts for the Trump trade, so they won't have to redo that whenever they actually launch futures. It's not going to change a whole lot, but it does definitely lower that friction. And it's just like, I do think that they definitely thought about that. And they rolled out the futures contracts or the futures accounts before that even happened. The Robinhood, I forget the name of the account, but Robinhood Future. Anyway, someone will tell me.
And from what they showed during the investor day, the ladder chain for futures contracts, like, it is super sexy on the user interface. Like, the way it looked, like, if you've ever used, like, I've used Thinkorswim for Schwab when I've traded futures, it's ugly. Like, it doesn't look anything like that. I mean, it works, but there's such a learning curve. And, that's what I think that Robinhood brings, and what they brought to options and why people started trading them. It's because they made it easy. And I think they'll do the same thing with futures. I think they'll make it simple to understand and easy to execute, where on other platforms you just kind of get lost in there trying to figure out how to even place a trade.
So speaking of new products, then let's get into this thing. This segment was going to be more. This segment was going to be more fun when we didn't know the answer, but we have the answer, so it's not going to be as fun. But on the app, this is a countdown for their New Year's Eve product announcement, whatever it is. It's called a New Year's Award, 8:30 p.m. tomorrow.
I don't know the announcement. I didn't hear this.
Okay, so this is going to be news to you. This is the community dug it up and we found it out. It's crypto. So if you're eligible for this reward and you're on the countdown screen at the time of the deadline, you'll get a notification about how to claim your reward within a week after the countdown ends. Keep in mind, you'll need a Robinhood crypto account to claim the award. And your reward will expire in 30 days. And after you claim it, you must keep the value of the reward in your Robinhood account for at least a year. Which sounds like it's not going to be $5, because they're not going to care about keeping $5 in your account. I mean, are they giving away a Bitcoin or something? Josh, any thoughts on this? What do you think this is going to look like?
Honestly, I don't know. It's, like you said, it's definitely crypto related. I saw some comments about maybe it would be related to something new, like a new token that they roll out, and introduce it this way. That'd be pretty cool. But honestly, I don't think there'd be one Bitcoin. That would be awesome if they did, especially if they gave it to me. I'd be really cool with that.
Well, so not everyone is eligible for it because you have to be on the screen at the time. So a lot of people will be getting drunk and partying tomorrow. I'll be live streaming, so I'll be on the screen at the time, right? So I will definitely try to claim the award. It has to be some type of a lottery system because they can't give out tons of money to older users. And then you have to keep the value of the award in your Robinhood crypto account for 1 year. That to me is like, that doesn't make sense if it's like $20 or $30. So like,
well, I think it's more along the lines of, I mean, that could be true. It could be a Bitcoin or something. I even know that there's brokerages here in Canada that are just giving away a flat Bitcoin to specific users as like a sweepstakes contest sort of thing. But it could also just be a retention thing of just saying, hey, just so you're not coming back onto the platform for 1 quick second withdrawing money, at least you'll have to come back to Robinhood to at least truly claim this reward, and potentially you'll stay on the app. And it's getting people to download that Robinhood crypto, which is really all what they're trying to do, and take more market share.
Yeah. 8:30 p.m. Eastern. Josh, you and I, we got to make sure we have the app loaded up.
I'm probably going to be eating dinner for New Year's at that time, but I'll have my phone on me. So, just have to be on the screen.
Do you understand how bad it feels? I mean, you guys don't, but to be such a Robinhood fan, go to the events. They give out something at those events like every time, but they're always like app related, like, hey, we'll give you the gold card or something along these lines. And I come to all of them and I don't get anything because I'm from Canada.
Sucks, bro. It's gotta suck. But you get to invest in their stock.
Yep. Yeah, it's true. It's true. It's a lot more than 3% I'm getting from the stock than the card. So,
okay, so let's ask. I have some more questions, and Tanner, if you have any questions, you feel free to ask Josh as well. But Josh, how do you feel about Vlad as a leader? And you're a math guy. Vlad almost got a math PhD. Do you think he's the guy to take Robinhood to 100 billion?
I think so. I think founders, especially for successful companies that actually make it, is attractive. You look at Elon at Tesla, you look at Karp at Palantir. I like having founders involved just because they're emotionally tied to the company. Sometimes that could be good, sometimes it could be bad. But I think more often than not, once they've gotten to a point that Robinhood is, where they're positive net income, they're growing, they're executing. I mean, I can't see a better leader for them right now. Ignoring everything that happened in 2021, which I think was a bit unfair to Vlad at the time. I mean, they were still a very young company. He was still very young. I think he learned a lot from that. He's obviously grown since then, and he's executed. I mean, as long as they keep executing, I don't see why you would say otherwise.
Tanner, go ahead.
No, I was just just thinking about if I was thinking more about Robinhood coming to Canada. Sorry, but I do agree with you.
Yeah.
Maybe when we're the 51st state, who knows? But
dude, that's gonna be wild. That's never gonna happen, but it's just wild to think about.
But Vlad would move on it quick. He would.
Oh my god, that would be insane. Okay, so you think Vlad's the right founder? You think he is the guy because he is a founder, math background, understands this really well. What surprised you the most this year about their execution?
I think the speed at which they moved. I think they realized that they didn't know this year was going to be the bull market that it was. And obviously they didn't know that crypto was going to do what it did. But once it started moving, they came in pretty hot. They offered all kinds of incentives. I mean, they didn't hold anything back. They rolled out 10 new products. They did 3 events. They're going to do even more events next year. Vlad has been on a tear doing interviews like the ones he's done with you guys. And it's pretty incredible. I think it's just the speed. Like, they moved first and they moved fast, and they were decisive. And I think that really worked out for them. It was probably a bit of a gamble because the market could have went, down. I mean, wasn't everybody predicting a recession for 2024? And we got the opposite. But everything they did, it was just fed by the market, just continuing to move up.
I think it's hard sometimes to find leaders that can run with this type of momentum. Like, they have the ball, and the thing is that they are delivering on it, and not just letting the macro give them all their gains. They're doing all these crazy giveaways to try to just build on top of the successes that they're already seeing, that partially is coming from macro. But it is very good at him at the helm. I'm glad there was no sort of switch up or change or anything like this during the GME days of whenever they sort of saw a lot of flack.
Yeah, I agree with you. I think the biggest bear case when the stock was at $7 to $11 is this idea that GameStop was like a lagging, or I guess a leading indicator of how bad they'll be in the future because of the what they went through in 2021. And so every time I would say something bullish about Robinhood, the response from the bears was, "But GameStop, how do you trust them? Buy button, sell button, yada yada." And at some point, you had to, as a bull, you just had to have enough conviction that was like, that can't be the reason this company doesn't succeed. It could have been, but it's been 2 years. It was bad. They definitely paid their price for it. Stock fell basically 85%, and we have to move on from there. Was that ever a concern for you? And was that a bit of the hesitation before you jumped in at 17?
Yeah, it was. I think I definitely thought about it. I was not affected by the GameStop mania. I did trade it early on. I think I sold it at like $38 before it went to 300.
Oh boy.
Yeah, right. Whoops. But yeah, I thought about it, but it really wasn't the reason. Yeah, I wanted to see profitability. And once they had that first quarter at the end of 23 where it rolled over, and then they followed it up in Q1, that was my signal that like, okay, this is moving in the right direction. You could just look at their revenue going up. I didn't think it would stop. I mean, and then people had kind of moved on at that point earlier this year. You didn't hear as much about the GameStop incident. Honestly, I never really cared about it because it didn't affect me. I don't know that many people that it affected. I know it did affect a lot of people. I feel bad for them, obviously, but yeah, as a company, you kind of have to set your emotions aside from that. I was just looking at the fundamentals, and the fundamentals look good. And once Q1 happened in April, I was like, all right, I'm pull the trigger on this and go in.
I just got some breaking news right here on Robinhood. Shout out to Luke. This is why retail communities matter, dude. So he just sent me the screenshot, and he's listening to us right there in the corner. But some more stuff. Robinhood Gold subscribers who are logged onto the Robinhood app and on the accompanying Robinhood Gold offer countdown screen at the time of the Robinhood Gold offer deadline will receive a reward, which is the Robinhood Gold offer reward. I don't think this is talking about Gold Monday because they're talking about a countdown screen, and there was no countdown screen for Gold Monday, to my understanding. Or no, maybe it is because they will receive an equal portion of the total prize provided. But was there a countdown screen? I don't. Regardless, it looks like they're doing a ton of different promotional things. I mean, this transitions us into Gold Monday. Your thoughts on Gold Monday? Your thoughts on how they're promoting and how they're acquiring customers? What do you think about that?
Tanner, you want to take this one?
Oh, sorry. Their thoughts on how they're acquiring members. I like it. I think that the way that they ended up getting those gold members was a way higher number than what I thought they were going to get out of $1 million. But I also think that that's a way for, I don't know if you guys watch Beast Games or whatever. I was watching that, and they people were clicking to vote themselves out on the exact same amount of money, $1 million. And so the first couple people who were signing up really did think that they were going to get $1 million or $200,000 or something, when really it was $8. So if you don't know how many people are actually going to sign on, greed can take a hold of you and go, hey, well, I'll try this app. And then because you've already paid for Robinhood Gold, then what's the name of that bias where people, because they've already prepaid for something, they want to use it more?
Confirmation bias?
No, it's a sales thing, but they've already paid for it. So they want to get their money worth out of it. So it actually leads people to use them as more of a primary brokerage, or somewhere where they might actually put more of their crypto purchases through. And so, those users will try to end up paying for their membership. And unlike the Costco, loss leader products that they have, Robinhood really doesn't have any. So, whether they come here for just the interest rate in the checking accounts, or the crypto, or the credit cards, or whatever they can get their hands on, it's all money making for Robinhood. Doesn't even have that Costco loss leading effect, really.
Yeah, I agree. And on the last topic, real quick, Nate is right. It did say end of year rewards. So maybe that's not about gold subscribers for Gold Monday. Maybe that is a new thing with what they're doing tomorrow. End of year could also just mean December, and that's how they're framing it. So,
I think it was the gold thing.
yeah, I think you might be right. Is it a recency bias, Tanner? Is that what you're thinking of?
No, I'll look it up.
Or is it anchoring bias?
Maybe.
It might be that. Yeah, Josh, do you think they're just being really creative with customer acquisition, and that's a benefit to them?
Yeah, I do. And I think that's another reason to invest in them. They've been super creative in the way that they've gone about acquiring customers, and they've done it in a way that has been a net benefit to them. It's not like they're throwing money at people to come, like you said, like if they get $8 and they brought in 120K people. They're doing it in a fiscally responsible manner, which
Right.
as an investor is what you want to see. And Vlad talks about it a lot when you listen to him, is like when they roll out products and they make decisions, they want to do it in a way that it's going to make them money, or where they don't have to put a lot of capital into it to get the maximum, return from it. And yeah, they're just super creative. I don't know who's on their team that makes these decisions, but they need a promotion.
Okay, let me ask you this question. How do you think of Robinhood compared to SoFi?
Oh gosh.
So I actually use SoFi now for a loan that I took out and remodeling a home. It was super smooth.
Personal
good
loan.
experience with them. Personal loan.
No, describe the process. How long did it take? Did you get approved?
God,
what
it
was the
took them
process?
like a day, and then
Wow.
like 2 days later, I had the money in my bank account. It was incredible.
Holy crap.
So for things like that, like I just don't. I know people like to compare them, but I think they're just two different companies that
I agree.
they just do two different things. Like there's some crossover, but I think they can both be successful, and I don't think they hurt each other. Honestly, I think they'll both do fine. I don't know why people like to say they're competitors of some sort, but they're really not. Yeah, I use them both, and for two totally different reasons, and they're both great experiences.
Yeah, I think early on when they were both $5-6 or $6-7, whatever, a lot of the FinTwit community started comparing them just because it's like a popular, like Pouncer and Snowflake, totally different companies, but we compare them for no reason. And it became this thing. But I think as the year has evolved, Robinhood went a totally different direction in terms of innovating on trading and brokerage. And SoFi just went a different direction in terms of being the best digital bank for Gen Z, millennials, even boomers that just are tired of paying overdraft fees at Bank of America, right? And so I think they are two fundamentally different businesses, but it's exciting to see both of them kind of evolve from the shells that they were a couple years ago.
Honestly, I think that SoFi is going to be like the investment banking of the future, and potentially Robinhood's going to be more of the Bank of America of the future, dominating the customer side, but SoFi is going to dominate on the institutional side. They are creating products that are so unique. Like people really discount the loan platform business that came out last quarter. And even after that, they didn't announce this, but people dug in and found this, that they're servicing their own student loans now. It's no longer Mohila, it's SoFi servicing. And that, along with the loan platform business, could lead to like billions and billions of dollars of new revenue that people have not accounted for since last quarter, like started in Q3. So yeah, they got turned away as a potential stock or company way too quickly from a lot of people.
Yep, I would agree. So let's end off the show by doing a reaction to a couple of clips by our boy Roy.
Can we talk about the new product first?
What new product?
The credit card edition.
Oh yeah, let's talk about that. All right, so I'll pull up the picture. Yeah, let me pull this up.
They said that they were going to offer something new every week, and I mean they've been doing it.
Yeah, so a lot of people didn't even know this was a thing, but basically now your 3% cash back, you don't have to transfer it into money in your brokerage. If you have 7,500 points.
This is not what I was talking about.
Oh, what the hell are you talking about?
I'm talking about the buy now, pay later.
Oh, okay. I'll set that up as well. So
They
basically,
did give
now
a new type of card though.
yeah, you can get a rose gold card, which is super cool. And there's a mystery box where you can like they're just gamifying this whole thing, and it's super fun. They're doing a ton of stuff. And then buy now, pay later. Yeah. So we had some screenshots from the community of them getting an offer to buy now and pay later. So Tanner, we'll start with you. Do you think this is something that could be successful for Hood?
Yes, I love it. It's great. Man, they're really coming out with all the stops on credit cards. And it's actually kind of sad to watch from a SoFi perspective because it's like, they just launched this whole new credit card product. And I'm like, why isn't it nearly as good as what they're doing with X1? And if it required, SoFi to just buy X1, it wasn't out of our price range. Like, I don't know. It's just crazy to see the amount of development that they're coming out with. I think that it's important, not that this is going to drive some crazy amount of new adoption, but this could be the differentiating factor between someone using Robinhood's card and someone using Amex or another card that's in their wallet. And so if you can get top of wallet, right, like the go-to card in someone's wallet that they go to pay for, you go from potentially getting 20% of their transactions to actually getting potentially 80 or 90%. And so that's a massive difference. They're early on in their credit card journey, but they might be growing as fast as literally they want to grow without ever needing to bring on any new customers. And it's getting stickier before it's even rolled out to even 10% of the audience that wants it. So, loving it.
Josh, your thoughts on them trying to expand into buy now, pay later and literally take every single part of the stack?
Yeah, I think that's like what Tanner said. It's only good for business. I don't have my card yet, by the way. Sad face. But I would use it. And you're talking about going from 20% to like 80%. I'm one of those people who puts everything on the credit card that I can. So like 90% of my purchases are on the credit card, and then I pay it off at the end of the month. And I would.
I'm in between different credit cards.
Oh, you mean between different? Oh, it would be 100% on this one probably for the 3%, just because I just like having everything in one place. I think that's the other thing that rub it in.
So beautiful, bro. Every time I pay for something,
it is.
I just like feel cool, bro. Like it makes me spend more than I should. It's
Do people ask you what that is?
Yeah, no, actually, I went to Best Buy the other day to get some audio gear, and I pulled out the card, and the guy was like, "What card is that?" And then he saw the logo. He's like, "Oh, I know the logo. That's Robinhood." I was like, "Do you use Robinhood?" He's like, "I've been using it for 6 years." And I was like, "Yeah. Have you ever invested in Robinhood stock?" And he was like, "No, I haven't." And I was like, "The stock's up a lot this year." He's like, "Oh, that's cool. I invest in index funds." I'm like, "All right, whatever." In ETFs. I'm like, all right. It's just like, yeah. He's like, "I use Acorns now, and I take the points and I put it into my ETFs." I'm like, all right.
But it's kind of like a free form of advertisement for Robinhood too, right? You see that logo, you see the card, it catches somebody's attention, and they're like, "Oh, what is that?" It might make someone ask a question, and you're like, "Oh, Robinhood." They might even not know what Robinhood is, and they go home and they look it up.
Yeah.
Dude, you know what? I actually love that because I think a lot of people, they like a certain way of investing, and then they go, "Well, of course, everyone's going to switch over to this." And then you're like, who the hell is using Acorns? And then you're okay, well, there's actually a large percentage of people that still want these other products. And it's such a unique industry. But yeah.
Well, the liquidity of public markets is massive, right? Trillions and trillions of dollars on all these different asset classes. But honestly, we're guilty of the same thing. How many of us invest in the products we use daily? Not that many of us, right? Robinhood is a unique situation for me. I don't own Apple, even though I use an iPhone every day. It's one of those things where it's like, I go to Costco all the time. I don't hold Costco stock. So I shouldn't be surprised that the guy never thought of investing in Robinhood. But it is always interesting to see how people think of products they use versus investments in those products.
Yeah. And I was listening to your stock awards thing that you were going on about. And you said that there was a private company. Which one would you want to invest in if they IPO'd? And no one said Notion. So I want to give Notion some love. I would absolutely pick Notion on that list. Notion or Databricks.
But do you know the valuation that Notion would go public at? Do you have an idea?
I mean, dude, hey, we're doing a hypothetical here. I haven't seen their financials, but I'm in love with that company. I use them. Like, I don't think I I use Notion more. I'm on Notion more than I'm on YouTube. Like, I mean, it's the #1 app I use.
Oh, what are you doing? That's an organization app. Like
Literally everything. I run everything through Notion. My whole life. I'm a big paying user. I use them for everything.
Well, it's worth 10 billion. So if it goes public, probably 15, 20. That's what I guess that's kind of reasonable. Maybe.
Love it. Love it.
Josh, where do you think the future of this event contracts products is? Do you think it's going to be sports betting one day?
I don't know. I kind of hope not. I mean, it wouldn't hurt the business side of things if it were, but I don't know if that's really their core business. I like the idea of big events. You know, I know you mentioned, I think on a tweet, maybe doing a Super Bowl contract. Like, I like that. You could do things like maybe March Madness, maybe like the World Cup. Presidential elections obviously would be one. I just don't really want to see them get into the weeds of it, like betting on, you know, who's going to make a field goal in the first quarter of a
X player
basketball
get
game.
3 rebounds.
Like, I just don't want to see that. Like, it just feels like, I don't know, it's scummy kind of. But the big stuff, like, I mean, I'm totally fine with that. And I don't know that they need to do, you know, go headfirst into it. Maybe just do big stuff for a while and see how it works out. See what kind of revenues you're generating off of it.
And what's the cost to operate this? I mean,
it's got to be high margins for them. Like,
yeah, because they're really just running APIs, right? It's not even their software.
Right.
So, like, I don't know. Even if you get like 80 million volume on betting on Fed's fund decisions, like, who cares? Like, it's just, it fits right into the niche, I find.
Yeah. Maybe financial stuff. That actually would be kind of cool to have it, since it is a finance app. Yeah. Vote on how many basis points they're going to cut at the next meeting.
Yeah.
I don't know.
Yeah. Because if you look at the software that they're using, which I'm pretty sure is Interactive Brokers ones, I could be wrong. But if you look at what they offer, that's all. They have a couple weather things too, but it's not a whole lot of sports stuff. It's just like, you know.
Does anyone actually trade event contracts on IBKR meaningfully?
Sorry?
Do people actually trade IBKR event contracts? Do they market that in the app as like?
I mean, they were on the election thing before Robinhood was.
I know, but Robinhood, and I think Robinhood used some of their technology as well, but Robinhood crushed it, right? 500 million contracts. So I wonder if the user base of IBKR would actually bet on anything.
But all I'm saying is the products that they are offering on their app is probably a good indicator to see what's coming next for Robinhood, because those are probably easy plugins.
Right. Yeah. Right. Okay, cool. Let's end off the show right here, Josh. First of all, thank you for being on. We're going to react to one clip by our boy Roy, who got a chance to interview Mr. Vlad Tenev. I'm putting the link in the chat. Everyone, please make sure to go watch it and subscribe to Roy's channel. Big interview for him. This is 4 minutes on Vlad talking about tokenization, which I thought was one of the most interesting parts of the interview. So let's listen to this, and then we'll get your thoughts on it.
Somewhat related to crypto, and that was just like all the rage back in 2018, 2019, 2020. You know, it's still important, and I'm just kind of curious as far as specifically, there's a mention of tokenization of real world assets and also stocks. So what does that mean for Robinhood, and can you break that down?
Tokenization to some extent has been happening outside of crypto for quite a while. When you're dealing with a dollar in your bank account or your brokerage account, you know, it's sort of like entries in a database moving around representing the actual dollar, but cash generally is not being moved. Similarly with stocks, I mean, the days where being a stockholder meant having a physical certificate that you have behind you in your office are no longer there. Even though I met someone that had some stock certificates behind them, and that was pretty amazing to see. But like, these things have been tokenized in TradFi already. So what happens when you bring them onto crypto rails? Well, I think that it becomes public infrastructure, which means that interoperability is much simpler. So you can see that with stable coins. You know, I can take my dollar stable coin and send it to you, regardless of what non-custodial wallet or even custodial wallet you're using. There's just a simple way to transfer value back and forth using the blockchain as the core infrastructure. Right now, transferring stocks from one broker to the other is like very complex. It's burdensome. It doesn't happen in real time. It takes multiple days. It's just, if you've taken advantage of our ACAT promos, you've probably felt a little bit of that pain.
Oh, yes.
And I think there's also not a great incentive for the contra broker, the broker whose assets are leaving, to come to Robinhood to make that as easy as possible. I mean, they'll pull out every trick in the book to like introduce some friction.
Yeah.
Including like asking you if you've considered the IRS tax implications, and when people hear that, they're like, oh gosh, I got to slow down here. So I think interoperability is big, and cost savings is big too. And then, any cost savings that a business can incur actually can translate to cost savings for customers at the end of the day, and them getting more value. And that directly reflects in long-term investment returns. And then you have things like 24-hour market. Very difficult for us to build the infrastructure for 24/5 trading for 1,000 US stocks. If stocks use blockchain infrastructure, then that basically, along with fractionalization, 24N fractionalization, happen out of the box just using public infrastructure. So I think it's where the world is headed. It's just a question of like how quickly, and can Robinhood help accelerate that, given our unique position at the intersection of TradFi and DeFi.
So, Josh, do you think that is where the world is headed?
Yes. I think that's one of my biggest reasons for holding Hood going forward. He said a lot of times that crypto, for them to do a transaction for crypto versus an equity, it's multiples cheaper for them to do it now. Imagine their equity and options business was 10x cheaper for them to do. I mean, that's just future growth for them that's not being accounted for. And I think they're the perfect size. I think they're the right platform to do this. I know someone in the chat said that they'll be the ones to bridge TradFi with this idea of blockchaining equities. I think everyone else is kind of too big, and their infrastructure that they're built on top of in these legacy platforms is too old to support this transition. And I think if anybody's going to be the guinea pig, it's going to be Robinhood, like they have been for so many other things, like zero fees, 24-hour trading. I think this is the next progression for them, is to, I don't know how long it'll take or when it would be, but I don't see why equities can't be traded 24/7 on a blockchain like crypto. Like, I want to be able to trade something on Saturday or Sunday if I want to. Things happen on the weekend. Events happen on the weekend. Yeah. And it would be nice to be able to trade that. And I think Robinhood is just positioned, like he said. I don't know that anybody else is positioned where they are that can even think about doing this. It would be really hard for Legacy to build this into their existing platforms. Robinhood's already built for it. And I think it's just going to be a regulation thing. They're going to have to figure out the regulation around it and how to make it work. But if anybody's going to be able to do it, I think it's going to be Vlad and the team at Robinhood. I think it's huge for them. I mean, especially if they're the first to roll it out. Why would you trade with anyone else at that point?
Isn't it weird to think that, like, we're looking at Vlad as being the person that's potentially looking at bridging crypto and equities, but he wasn't really the first one making a move on this. Do you guys remember who the real first guy was that was starting to make some big moves in this?
In what exactly?
Bridging crypto and equities into one platform and potentially looking to make them into real world assets. They tokenize real world assets.
Who?
It was Sam Bankman-Fried.
Yeah.
And he even was using Robinhood as a potential. He wanted to potentially acquire them. He was buying up shares of Robinhood.
He owned a ton of it.
Yeah.
FTX was a huge shareholder of Robinhood. They had what, like 10%?
Yeah, around about 7%.
Yeah, 7%. Okay.
So hold on. So you think he was trying to Tanner, do you think that's why investors were in love with FTX because they thought he could actually tokenize the world?
Well, I don't know. Crypto was really hot, and he was off. Like, I don't want to make any comparisons between Vlad and Sam Bankman-Fried, but FTX got really popular because they were some of the cheapest options on the market. Like they came in with a completely different strategy. But then Sam Bankman-Fried turned into scam, bank run, fraud, and took off with people's money. But they could have made it work if things didn't fall apart, like, which is crazy.
Yeah,
and I don't think that Vlad's having drug-induced sex parties with his colleagues. I think that they're running a complete normal operation.
Yeah, but the idea though of tokenizing everything. I mean, Sailors talked about it as well. I think a lot of the DeFi people are thinking.
Dude. Of course, Brian Armstrong's thinking about it. Sam Bankman-Fried's thinking about it. Of course, like that's every crypto guy's dream. And it makes sense. It's faster. It's instant settlement. It's safer. It's the way that things are going to go.
Do you think the traditional financial system would allow that to really happen? Or it doesn't matter?
I think the traditional finance system will own that next piece.
Yeah.
I think that they'll adopt it.
There's too much money. It's going to happen. It's just a matter of when, because they're cutting out the middleman. I mean, they're going to save a lot of money going this route, and that's all they'll care about at the end of the day. They'll make it work. They'll figure it out, and they'll join. Robinhood might be the first to do it, but everyone else eventually will do it.
Yeah.
All right. Exciting stuff, Mr. Joshua Hill. Thank you for being on the show today. His Twitter is in the description. I'm going to put it in the chat right now.
It's his username right here. If you just look at the blue as well.
Yep.
Yeah, I doubled up by accident. Yeah, I don't know what I'm doing on here. Sorry.
Josh, are you trying to take content more seriously? Or you kind of just do this for fun on the side?
I do it for fun on the side. I'm not trying to make a career out of it, and I just really love doing it. Yeah, I love looking at stocks all day long.
Is anyone getting the like data-driven investing for Robinhood vibes? Like chemical engineer, like I don't know. He's got the same like you probably have 5 kids.
Yeah, 2, just 2, not 5.
You're on the way. You're probably a little bit younger.
Oh no, I'm done. I've permanently fixed that situation.
Gotcha.
No more children for me. Dude, kids are super expensive. They're wondering why people don't have kids anymore. It's because they cost a lot of money.
How old?
That's why I'm really doing this.
How old are your kids?
5 and 2.
So I before this podcast, I just got back from my mom's friend's sister's dinner party thing. I had to go there for an hour, and there was the neighbor was at the party, and she had a little 9-month-old. And the only thing I could think about when I was looking at this 9-month-old is, holy crap, she does not have to pay her capital gains tax short term as ordinary income, which is what I'm about to work my ass off for the next 5 months to be able to pay off. And I'm like, wow, it must be so nice to just shit and eat, and someone cleans up your shit and you sleep and you don't have to worry about anything. But to your point, it's expensive. It's very expensive.
Just give it 50 years and you'll be at that point again, though, where you'll have to have someone feed you and clean your shit again.
That is correct.
You want kids, Amit?
Oh, I want 3 kids, dude. I want 3 kids. I want kids. I only had one sister growing up, and I'm really grateful for that. But I would have liked to be in like all my cousins are in India, so I never really had a lot of siblings. It'd be cool.
Yeah, you do get a deduction for having kids, so that's true. I saw somebody say that.
That's true. We can.
Yep. It's not a lot, but it's something.
No, but I was really looking at this 9-month-old, and I was just like, damn, she doesn't have to work her ass off for the next 5 months to pay back the money that for some reason Congress was like, oh, if you make short-term capital gains tax, that's part of your ordinary income. Like, what bozo in Congress thought that made sense? And now I got to pay that off, but I have to work the next 5 months to get the money to pay that off because I don't want to use my gains to actually pay that off, because then I'm kind of left with barely any gains. Like, it's
terrible. And if you lose money, you can only get back $3,000, even if you lose 100,000. It's so fair. The system is so fair.
So fair. All right, Josh, thank you. Appreciate you. We'll definitely have you on the show again in the future. And thank you, everybody, for joining. We'll see you guys next time on Robinhood Weekly.
Thanks, fellas.
Bye, guys.
Bye, everyone. Have a good one.